right, gentlemen, are we ready? Oh, Tom, was there anything that you wanted to pull off consent?
Yeah,
What?
3 of them. 6, 10, and 11.
6.
7, 6, 7, 10, 7, 11. 7, 11.
Are they long things? I'm just trying to figure out whether to do those before we do John Rader, so that's why I'm asking.
Not long, really, just questions.
Okay, so we can
7, 10 is going to be a no vote anyway.
Okay, we can try and push through those. All right, I'd like to. Sorry, you ready? You're ready? Okay. So I'd like to call our Finance and Audit meeting for August 4th to order at 8:30 a.m. We have all members present except for Lori and Kelly. We have minutes for approval. I'll entertain a motion.
I'll move.
Carlos, Tom seconds. Any questions, concerns? All those in favor say aye.
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 Opposed? Public comment? Any public?
No.
No? Okay. Member comments? Okay. John, we're just gonna do the consent agenda before we get to you so that our staff can be productive. Routine consent agenda. I know, Tom, you wanted to talk about 7, 6, 7, 10, and 7, 11.
Yeah.
Are there any other items that members want pulled? No? Then I'll entertain a motion to approve items 7, 1, 2, 3, 4, 5, 7, 8, 9. Jeff and Steve will vote. Tom?
7, 6.
No, we're voting on
yes.
this. Yes. Okay, Steve?
Yes.
Carlos?
Yes.
Larry?
Yes.
Jeff?
Yes.
Myself? Yes. All right, calm down in the audience over there, please.
It's just if I were a candidate, and I didn't get close.
No. I won't comment on that. 7, 6, I'll entertain a motion.
Yeah, we'll move.
Steve, Larry, okay, Tom?
Why the need of $145,000 AV equipment when it seems like the current equipment is working fine?
So what this would do is outfit this room, B and C, with cameras in the ceiling and microphones in the ceiling, so we could have better virtual hybrid meetings. It'll further integrate. So the equipment isn't here, right? The other part of it is 30 Shure wireless mics in the county boardroom. The microphones that we have with the upgrade to the Crestron system, you can't see who's wanting to speak, right? And you can't, the county board chairman can't shut down people like was able to before. So this would upgrade that type of functionality. And then also with the change in the board, we thought the wireless mics would be better because we can put those in now and then move them around when the changes occur. So that's what this project is about.
Okay, it's a lot of money.
Yeah, the lion's share of it's these wireless microphones.
Okay, thank you.
Any other questions? Okay, we'll go to vote then. Steve?
Yes.
Carlos?
Yes.
Larry?
Yes.
Jeff?
Yes.
Tom?
No.
Myself, yes. Okay, motion carries. We're on to item 7, 10. I'll entertain a motion.
So move.
Larry? Steve seconds. Tom?
The Wold Architects. I've been on record being against this expansion, and we're starting off at $269,000. So what's the timeline on this?
His timeline as far as getting the architectural renderings put together.
Mm-hmm.
We're looking to have them done over the next couple months with another resolution coming forward, probably closer to late winter, early spring for a construction bid. So this is just the design and engineering phase of the project.
Any rough guesstimates on what the project's gonna cost?
NPA, do you remember what they had it for? I thought it was 4, but we don't know with inflation, a lot of the construction costs and how that's gonna be impacted. So we won't have a true number until we do the actual bidding.
And how many patients will this wing?
It's gonna hold 20 to 24, depending on the design. This is not an addition.
Just not expansion yet.
Yeah, this is a remodel of its existing space with a building a bump out to have their own private dining, common space area, that kind of thing. But we are not adding on beds or more hallway space, that kind of thing.
So will that affect the current population? The 120?
No, that number's gonna stay the same.
Okay. All right, thanks.
Any other questions? Okay, we'll vote then. Carlos?
Yes.
Larry?
Yes.
Jeff?
Yes.
Tom?
No.
Steve?
Yes.
Myself, yes, motion carries. We're on to item 711, I'll entertain a motion. Steve?
Second.
Larry seconds. Tom, you want this one?
Yeah, just explain the need for the concierge from part-time to full-time.
So the concierge position was one that we have had left open, and we have not had anybody in that role. And with the frequent admissions that we've had lately, one of the issues we're running into is there's nobody that's going in and taking care of the little things during those first 7 to 10 days. And we were getting some concerns brought forward. So what we've done, and part of this is in response to the fact that we are still having a real struggle getting CNAs and nurses. And so by taking we're like looking at it creatively and looking at lower paid staff positions that can support the nursing department instead of bringing agency nursing staff in at a very high rate. And so what we've looked at is this is a position that we can transfer a part-time receptionist into, not fill the part-time reception position. So she's still gonna work her part-time hours at the front desk, and then the remaining balance, she's gonna be helping with new admissions, transitions, discharges home, and doing the little things to take that pressure off the nursing staff so they can still focus on hands-on care.
So will that be reclassified then for the additional functions?
Yeah, it's being, it does not, okay, let me explain. The reclassification is just from full-time to part-time. The job class still stays the same. The pay rate stays exactly the same. All we're doing is just moving from part-time to full-time.
Okay. Thanks.
Any other questions? No. Okay, vote then. Larry?
Yes.
Jeff?
Yes.
Tom?
Yes.
Steve?
Yes.
Carlos?
Yes.
Myself, yes, motion carries. Okay, we're done with consent agenda. We're on to, back to item 6, our audit from Baker Tilly. John, come on down. You flying solo today?
I'm flying solo, yeah.
Wow.
Yeah, I know. Let's see how it goes here. Is this okay right here, or would you rather?
Yeah, that's great.
Okay, all right.
Sit wherever your heart desires.
All right. Well, thank you, everybody, for having me. I appreciate it. It's nice to see all of you. I'm familiar with most of you, I think, but if not, I'm John Rader. I'm a director with Baker Tilly. Cameron Sawyer is the manager on the audit. He was going to be here, but he's on vacation this week. So Cameron works a lot of hours, so I'm actually really glad he's taking vacation. That's good for him. He played a key role. He worked very closely with Kevin, and when Karen was with the county, working a lot of hours to prepare your annual comprehensive financial report, your financial statements. I'll talk about that a little more in a bit. I know you see me every year, but there's a lot of other people involved in the audit. We've got a couple key people. Justin Hoagland has been running the circuit clerk's audit for years. Abby Peterson has been on the audit, primarily focusing on the Valley High portion of it. That takes some specialization, and Abby does a number of nursing homes in the Midwest. And then the rest of the team is primarily made up of people who've been on the audit for 2 years or less. So I think it brings a nice blend of a fresh set of eyes and new perspectives and new questions coming about with that knowledge, so that we're not just trying to figure it all out all the time. So that's a little bit about the team. As far as the status goes, you probably know this, but we do three audits for the county. We do what we're here to talk about, primarily the financial audit. We started that back in December, it's hard to believe, where we spent several days out here doing what we call preliminary work. We're sampling payroll and transactions and AP transactions and journal entries and doing walkthroughs of a lot of different kind of primary functions, such as how do you collect taxes, how do you account for grants, how do you process payroll. I think there's about 8 of them. Doing that kind of stuff, kind of setting the table for when we come back. We do come back for an entire week in the month of March this year, with a team as many as people as we can fit in that back room, and as many as people as a county can handle, I guess you could say. And we got through the bulk of the audit. But from that point in time up until, for the next 3 months or so, we were working on completing some open items, primarily capital assets, some grants, trying to get some final accounting on those, and a few loose ends. In conjunction with working with Kevin and Karen and others to prepare your financial statements. As you know, the county purchased a system a couple of years ago to help prepare this, but Cameron still played a big role. I think I don't know, they met every week, sometimes till 10 o'clock at night, quite often till 10 o'clock at night, working together to get this put together. So that's where the effort was for the 3 months after we left here. We just issued finals last week, and that's kind of a significant point in time because then Kevin submitted that to the GFOA for what will hopefully be its 24th year of us receiving that award, which is really commendable. A lot of effort goes into this very large report. The other 2 audits we do, as you know, are the circuit clerk audit. We did that back in January and February. That went well. We didn't have any findings. And the single audit, which occurred over the last June and July, and we're hoping to issue that over the next few weeks in final. Normally, so that's an audit of your federal award programs, compliance-based, okay? Not just compliance, but internal controls over that each of those compliance requirements. Normally, we audit 1 to 2 different federal award programs, but this year we actually audited 5, so quite a few more, and that's in direct relation to the additional federal funding that's coming into not just McHenry, but throughout the country. So one of those programs, Workforce Investment Act, was a non-COVID program, but all the other 4 were COVID-based programs that we looked at. Some new things we need to look at with the county, and that's gone well. So that's where we're at. I'm going to spend the rest of the time walking through this document. Do all of you have a copy of this, the reporting and insights? Okay, great. I'm not going to walk you through the whole thing, but I'm going to hit on a few different pages. So page 3, and if you're a PDF, it's the same PDF, page 3. This just lists our responsibilities. Quite often there's confusion as what kind of an audit is this? It's a GAAP audit, right? And that kind of lays out what we're responsible for. But there are other kinds of audits, forensic audits, internal control-based audits, a variety of them. But this just kind of lays it out. And on page 6, this is the area that most committee members would be interested in. The next few pages focuses on the internal control matters that came up during the course of the audit. Okay, and you kind of think of this as falling into 4 different buckets. There's the material weaknesses, which when those are identified, it basically says we found an internal control issue that could cause a material misstatement in your financial statements. And the fact that we prepare the county's that we work together with you to prepare the financial statements, and we did have some material entries as well, requires us, the auditing standards say this requires you to report a material weakness, okay? I do want to say, and I've said this to you in the past, we have this comment in 90-some% of our reports for governments, okay, throughout the country. It's very common, and it comes down to resources. Does the county, does the government, do they have the staff and the time and the knowledge and everything that's necessary to prepare a set of GAAP statements? It's a huge hurdle to get over these days, and that's why most CPA firms do prepare these for governments. The county's made a lot of effort over the last couple of years to try to take that over, and it's making progress, but we're still helping out a fair amount. Okay.
So is there a threshold by which you don't have to report that, in the sense that you do 10% of it or 20 or?
Yeah, there's not a specific threshold like that. There's a lot of judgment that goes into it. But the entries, it's pretty black and white there.
Okay, so if you're making entries.
Yes.
Okay.
If we're making entries, we're going to have this comment in most cases. If it's a miscommunication or something like that, but almost always we're going to have this comment. Even if you have no entries though, we prepare the statement of cash flows for the county. I mean, that's a pretty big part of your statements. helping with conversion entries and things like that. It kind of depends. If we feel that, okay, we helped out, but truly, if there was something misstated, would the county pick up on that? And I would say in many cases, yes, throughout this report. But in some cases, no, there's still some risk involved. Okay? So there's some judgment, but there's also, with the entries specifically, it's fairly black and white. Yeah. Okay. If you flip to the next page, page 7, it's not highlighted, but at the very bottom, we did have a comment in the past. It was considered a significant deficiency that's been resolved. So the county has a lot of checking accounts, as you know. The payroll, or it's like an impressed account, zero balance account. That was being reconciled, but we wanted to make sure that that was also being independently reviewed, and we could see that this year, so that's been resolved. Okay. So that's good progress. Page 8 now gets into those other types of comments. Okay, control deficiencies, which sounds bad, but it's not as bad as the other significant deficiencies and material weaknesses, and also just kind of best practices or informational points. At the top here, monthly year-end accounting, monthly and year-end accounting, these are journal entries. These are journal entries that, basically journal entries take transactions that have been posted to your system and moves them. So we always consider those to be higher risk. The standards say we have to consider those higher risk, and so we sample them. And we didn't find any problems with them, but not all of them were being independently reviewed. And that's one of the 3 things that we look at for each one that we test. I will point out the management response here. There's a policy adopted mid-year. And so the county's done exactly what we would suggest, is to implement controls specifically within your newer system, D365, to use the workflow process for those approvals. When you have a sophisticated system as this, I mean, it's built for that. So I would hope and expect that to be resolved for next year. Decentralized checking accounts. This is another one that the county made some nice progress on, and I would expect that this would be resolved next year too. And this is really, it's a bit of an internal control issue. Well, it is an internal control issue, but it's also a best practice. The county maintained, and still maintains, some external checking accounts that are in the different departments, right? And they weren't all in the general ledger system. So whenever you had that kind of disconnect, you lose that element of control. And with the risk associated with that, we were making this recommendation for the last couple of years now, I believe. Over the last year, I believe a resolution was passed. There was an evaluation of what accounts are those, and working with the departments. Some of them were brought into the system, so that was nice progress. The remaining ones that are not, there's just a few. The ones we typically do see at counties we audit still being outside of this system. And don't get me wrong, many of these, especially in the courts, are maintained in a separate system. Okay, it's not like they're just floating around out there, and there are controls over them in that specific department. Okay, so that's what we just wanted this evaluation to occur, and with that being done in the middle of the year, we'll take a look at this next year, but probably resolve it. Good question?
Well, you're saying probably resolve it, and I feel like the county has done everything we can to try and resolve it, in the sense that we have accounts that are autonomous to the county, but outside of our control. So how do you justify, I don't want to say dinging us, but in the sense that,
well, it's still in the report this year because of this evaluation going on in July. So for a good portion of the year, we're still.
I get it.
But for next year, as an auditor, I can never say, "Oh, I promise."
Well, no, but
because we still have to look at it.
Okay. Well, I'm just trying to figure out: is there something else we should do?
No.
Because we've used all of our tools in our toolbox to try and resolve these situations to the best of our ability.
I agree. I think you've done all the right things.
Okay, so.
You're still not getting a gold star.
Yeah, I'm getting a, well, maybe, but maybe not, I don't know. Okay.
So when I was preparing for this meeting last night, I did put a note in our file to resolve this, just making sure that nothing had changed from where we're at right now, which I wouldn't expect it to.
Okay.
Yeah. So I can promise you that.
That's.
At the bottom of the page 8 here is another decentralized cash point. This is just informational, it's best practice, it's in all of our comments. Just because when you do get collections outside of that centralized system, like I said a few minutes ago, there's always risks associated with that. If you read about fraud on the paper or anything like that, quite often it's these accounts that people just didn't know was out there. All right, page 10, and for the next several pages, these are required communications. You'll see them in all audit reports. It points out things like disagreements with management, problems or delays or anything of that nature, accounting estimates. A lot of these, if there were issues in here, we would definitely be talking about them because something didn't go smoothly during the audit. That's not the case. There's nothing to be surprised about in here. The first bullet point, though, I do want to bring up the fact that the county implemented GASB 84, which is regarding fiduciary activities. So in your statements, one of the last set of schedules or numbers, what used to be called agency funds. Basically, money comes in, you have a liability, and it goes out, just kind of flows through. This changed the nature of that, kind of cleaned it up, but it also created an income statement, so it shows, as they call it now, additions and deductions. And it made sure that the funds that were being held in those accounts were truly custodial in nature. Because a lot of governments would put their own funds in there or have a mix of it, and this really needs to be for other individuals or organizations held outside of the county's operations. All right. If you flip page 26, as long as we're talking about GASBs. The GASBs are obviously the county rules. The GASB is a standard setting body, and you had to implement 84 this year like we just talked about. Previous couple years, I don't think there were any. It's been kind of slow, and GASB gave governments a break because of COVID and all the other priorities. But as you can see, there's a big list coming around the bend, and we laid those out here. I think in just the last few months, 99, 100, and 101 were adopted. The big one next year is going to be that very first one, 87 for leases, okay? Leases, if you ever taken an accounting class, they would teach you that there's two kinds, capital and operating, right? This gets rid of the operating, and it basically says, it creates a single model for lease accounting based upon the principle that leases are financing of the right to use the underlying asset, okay? So there's certain criteria. You have to evaluate these types of potential leases or what you think is a lease, that if they meet the requirements under 87, then you need to treat them as a lease, and you're going to have either a receivable or a payable, depending if you're the lessor or lessee, and a deferred inflow and deferred outflow. So it's going to gross all that up on the balance sheet with additional footnote disclosures. It's a real headache. We've all been dreading it, to be honest with you, and they delayed it for a year and a half. So, but next year this is going to be required. The good news is for the county, you have a system, because it's kind of a three-step process. You have to inventory your leases, truly figure out what's out there. And then the second is going to be making the value, along with that, what's material, because you have copier leases and things like that. And one thing the county might want to consider is creating a policy, because you, just like capital assets, you don't have to capitalize every single small lease, and that can save a lot of time and money. So once you get that inventory, figure out what it is, then the second thing you need to do is come up with accounting entries. For each one of these leases, there's multiple entries, and that's where the complexity really gets built in. But your system that you own to track your debt can handle these, is my understanding. So you're a step ahead of a lot of places, because I think the county is going to have quite a few leases to be tracking. And then the third thing is going to be actually to report all this. And so we can help the county out with the footnote disclosures and things like that. They're all being developed within our firm right now. I've only seen one place early implement this just because of the big hurdle it is. It's an airport out east, but it's a lot of places have been dragging their feet on this. So, and FASB is doing something similar this year.
Can I ask you a question real quick?
Yeah.
What if you were to have a third party hold the leases so that you weren't actually in control?
So some type of arrangement where that you would still be obligated to that third party?
Yeah.
Yeah. I don't know. You'd have to go through the questions for it. It's a good question. My guess is it would still capture it. If the essence, it's like what they call it, quasi-external debt or something of that nature, whether you're trying to basically shift it somewhere else, it could still perhaps be picked up. It's a good question. And there's so many of these questions that are coming up, which creates more of the complexity. You know, energy projects and they're regulated leases. Those get excluded, but what means regulated? You know, there's a lot of questions around that. Who has the oversight? For airports, that's FAA, DOT in some cases, Department of Energy. If they can set the rules and come in and there's 3 criteria, that if these 3 criteria are met, where the oversight agency can dictate the terms, they feel that participants are, you know, are being treated unfairly, or those are considered regulated. And so we're trying to pick up on what do those constitute. So that's a good question. Do you have those situations?
No, but we might want to.
Yeah, right.
I mean, I was just trying to think of some way, because if we're not technically signing the lease, we're technically have a vendor that we are contracting with to provide a service, which is a leased product that they choose to lease, then
I think what you'd have to do is evaluate the contract then, to see if that really still constitutes a lease, or represents a lease.
as long as the word lease isn't in the contract.
No, it doesn't come, yeah. I wish it was.
Good try.
Right.
Well, you know,
I do have-
I'm always looking at different angles.
I have a lot
so-
of governments that are trying to move away from leasing arrangements as much as possible.
And we don't really have that many true leases. We only have like 3. And we do have debt book is the system that we use to manage it. So that system kind of, they already built in a lot of the GASP 87 compliance requirements. So it's a lot easier to manage than having like other organizations that have tons of leases.
So, and Kevin, I don't know if you know this or not, but what I've seen is some systems or providers, they'll do the evaluation of the lease up front and help try to determine if it is or not, and others will not. They'll just basically say, okay, you gave us an agreement, we're going to plug it into our system and give you the entries. So I don't know.
Yeah, that book does.
That's good.
They
That's good.
provide that analysis up front, so we just load the PDF of the lease agreement, and they do the analysis on their side
Okay.
up front.
Good.
And then they set it up cool.
Yeah. And so then part of our process this year is going to be not only getting through all this, but then we have to audit it, right? So we'll be auditing that information and their determinations, DEPLIC's determinations.
What is this change trying to fix?
Yeah, that's a great question. So there have been a whole bunch of operating leases that basically just the revenue streams are going through, but most of this, the readers of the financials have no idea what types of agreements are out there. And so this gets it all on the balance sheet, along with the disclosures.
All leases?
Not all. I mean, immaterial ones wouldn't. Like I said, regulated ones wouldn't. There's a lot of leases out there that are non-exchange transactions. So for $1, you run this housing program for us for $1. Those wouldn't be considered. Anything that's less than a year gets excluded unless the intent and the expectation is it will get renewed every year. I don't know if it's going to be all that valuable. A lot of these rules get adopted. There's a lot of hype around them, and then nobody really looks at it. It's unfortunate, and it's the direction GASB has gone.
I feel now it does show
my 2
the
cents.
true liability on the government side on the balance sheet. So in the past, to incorporate that amount, you would have to go to the notes to the financial statements, which nobody reads.
That's very true.
Now it brings that right to the front financial statement. So
In a sense, they get amortized.
right.
Now, your income statement and the way you budget and such is not going to change, because the revenue streams, if you're the lessor, and the payments aren't going to impact your. It's just going to be on the balance sheet.
Okay. Sorry, continue.
No, and I won't walk through everyone. 89, I don't think that's going to impact you. This is for full accrual funds, 911 or Valley High, and they don't have debt financing construction projects. Conduit debt, That's the type of debt that is supposed to be disclosed, but a lot of places don't disclose it, and this just kind of cleans it up. It's basically 3 parties are involved, and the government usually acts as the issuer, and so this is going to kind of clean those disclosures up. The only other one I want to mention in here is 96, and this one will very likely, I'm sure it's going to apply to McHenry. You got 2 more years for this one. Subscription-based information technology arrangements. These are situations where if an agreement with a vendor, a software vendor, exists, if 87 doesn't capture that as a lease, and these are, then 96 very likely will. And these are situations such as cloud-based systems, or GIS, SCADA, things like this, that they're just becoming more and more common. And most of those aren't being picked up at all right now, unless they're being picked up like as an intangible, like D365. That is. But these are really the right to use the software, which is a little bit different. All right, enough on the GASBs. Let's get pressing. On page 29, this is a high-level summary of the material entries that I talked about. You can see which fund they're in. So that drove in part the internal or the financial reporting comment that we talked about. So that's all I had. You have copies of the financials. I'm not going to walk you through that unless you have specific questions within there. The other one, well, everybody's great to work with, as you can imagine, and appreciate you having us here as being your auditors. It is a lot to get through for everybody involved, so it's always a good feeling when we issue that final like we did last week. Any questions for me?
Committee? No?
Good job.
Okay.
Thank you.
All right.
Thank you.
Thank you very much. Appreciate it.
Thank you.
Kevin, can you make sure this gets sent out to the full board then?
Will do.
Okay, thank you. We are on to budget reviews, 8. Bob left, okay. Is Adam here?
Okay.
Well, while we're waiting for people to show up for their budgets, Kevin
We
left
can do
too.
purchasing. Adam is a family funeral, so we can do purchasing.
Okay. I mean, there wasn't much in his.
No.
Wasn't much in either, really.
That's true.
Bob, this is Tyler. Do you mind if I drop, or do you have it?
Tyler, you can go.
Thank you, sir. Nice to meet you all.
Peace out.
That was the guy from True Roll. Yep. Hey, you can come up for your budget meeting.
Zero.
He works hard and everything like that.
Yeah.
Well, we were looking for 3 million for Valley High, so there you go. We're starting to.
All right, Carrie, you want to do purchasing, I guess?
Sure. Do you have a question? I know in our meeting, one thing Adam talked a lot about was some of the changes in the mailroom and new technology. So that's where some of the reduction in the postage came from. But then there
Okay.
was an increase to buy this piece of equipment. Another thing I know that he's been working on a lot with finance is the virtual card payments, and they're just about done with that with Wells Fargo.
Okay. I mean, I don't know.
Do you guys have questions? Pete, do you have anything to add?
I'm trying to find it here before I can add anything.
It's at the very end.
Yeah. You know, it's a small department. Adam's continuing to look for efficiencies. We're trying to put a few more things on Adam's plate, like working on the capital plan and everything. He's doing a good job on that, but that's not really, a budgetary impact. we have, another thing that Adam has kind of taken a lead on for us is looking at the expansion of fiber, both in the west and the north of here, and kind of asked Adam to coordinate all of our activities with the consultant that we hired about a summer ago, or a year ago this summer. I've been working with myself and Tom Sullivan and Daryl Kuntz a lot out of DOT. We've had good progress in that, had a good, exciting meeting yesterday with Frontier Cable, talking about what we're doing in the north. So what I asked Adam to leave that on as a goal for him.
Sorry about that.
It's okay. But Adam's staff is the same, and he's not proposing any particular changes there. And we're just talking about purchasing, there's not a whole lot of highlights, it's pretty straightforward.
Yeah.
All right, is there, does anyone have questions? Consensus of the committee to move their budget forward, purchasing budget?
Yes.
Yes. Okay. Hey Bob, good to see you again. Fabulous.
I wasn't. Tyler was staying on for the rest of the meeting.
Oh, I don't want to.
Tyler.
Yeah, Tyler. Thanks for that program. I think that the time is now. Exemptions continually moving up, and to make sure we can do is everything as much as practically possible to make sure we have these things administered. Legislation doesn't give us much resources or money. They just keep passing exemptions and increasing the value of them. So this program will pay off. And,
So what's the, and not that this is part of your budget, but I mean, so when we find discrepancies, what's the intent on how to treat that?
what I'm looking at is the same way, like, what I like about it is a third party that has access to all these databases for checking voter records, where drivers, everything, where credit cards are going, where return mail is going. And when we get this document, we'll get a document from them. The intent would be to send this and say we have this information from a third-party vendor that we utilize, and we need you to verify, explain this information that is incorrect, and that you have multiple exemptions, etc. Send them that, and then give them a certain amount of time, 30 days or something, to respond to us, and then we'll go ahead and make the proper changes. And every exemption falls off the general homestead. So if you get once the general, they all, whether it's a senior freeze, the disabled exemptions, it all centers on being a primary residence.
Well, I guess my question is at some point, is there any intent to prosecute those that are fraudulently?
We can go 1 year back. I've not been aware of any major prosecution for these things, but again, it's not the right thing to do. We've been able to go 1 year back. Chicago or Cook County was trying to go 7 years back based on that 7%, where they could, because they go back. He wanted to go back at the time. Assessor Berrios at the time wanted to go back 7 years. I don't know what the result of that was, but they limited us to go back 1 year. So in other words, to put the exemption back on as in part of the assessment the following year.
And then they would have.
No, the intent is to just to make sure we're doing everything we can to the taxpayers of McHenry County to make sure that we've got these things right and that they're paying their fair share and they're getting that's what we know. That's what the intent is.
And I'm not talking about there's situations where you have an individual doing this multiple times over. So I guess that's what I'm
that question would have to be, and yeah, exactly, that we'd have to determine, through the state's attorney how to handle that.
okay.
If
if we feel that this is like a major deal with numbers.
Yeah,
you know,
well, and that's the point. My point is you know, you're capturing the data, you're capturing the ability to rectify the situation, but when you have an individual who is exploiting and taking financial advantage of it, yes, we can go back 1 year, but to me, there should be some ramifications for that individual.
It may be, and it's a very fair question. Of course, our intent is just to make sure that everybody's paying their fair share, not to prosecute. But it may rise to that. Maybe have to work with the Attorney General some, because Bob was noting a sample that we looked at the other day. We have multiple homestead exemptions in 3 different counties. So which state attorney is going to work on that? It's interesting, and
But certainly,
this guy was registered in Cook County, but he had like 7 in Kane and 3 in
They picked up a
McHenry.
house in McHenry and had it there.
Well, so that's my point. My point is there's people taking advantage of the system, and to me, there should be consequences for
I
that.
don't disagree with that, Michael.
Okay.
And that would be exactly what a question for the state's attorney here, Patrick, as well as Norm Vinton, to say, what do you want to do? I mean, when it rises to I need their help on a legal opinion, that's where I go.
Okay. Just as long as, and again, I'm not trying to go after, you know.
Well, that's the thing, you don't know. Sometimes you could say, well, it's our fault or their fault, you know, but, you know,
And
the
I'm not-
majority
yeah.
on these ones with 7 or 8, it's their fault. And
Well, exactly, and that's my point. There's a difference between I didn't know and
Yeah,
I'm
right.
sorry, I'll pay, and you know, whatever. That, to me, that, so be it. It's the people that are exploiting the situation and taking advantage and purposefully exploiting the.
Well, and that's the thing, and the calls we've got now, you know, over the years have increased in terms of, with a couple other exemptions, where they put children or on the exemption in the, God bless them all, and the disabled veteran, where children, I get phone calls that say, this guy lives in the state of Washington. This guy, he doesn't live here. It's just it's their son, and he's everything. So that's what I want to.
Yeah,
I don't want to.
Their son
I'm not
is
going after anybody.
a
but
disabled
I'm
vet,
going
but he doesn't
after
live in
everybody.
McHenry County.
But I get those calls now, then we see the true roll that they say could be anywhere from 2 to 5% of the roll is wrong in terms of exemptions. Well, I think 5 might be high, but even if it's 2%, that's
That's a lot.
2,000 out of 91,000,
Yeah.
almost 2,000, and that's a lot of.
The state is, I'm not speaking to their intention, but it is more and more of a burden. These exemptions, there's more exemptions and they're worth more. And there's more and more of a burden on his staff. So we're trying this tool without adding more staff to probably do a better job of screening them than we could by adding staff.
And us to have access to those bases, that the cost of getting access to those bases, the cost of having somebody that would, on staff, that would be savvy enough to handle this, but I love the fact that we can get a document from them, like just similar to getting a real estate appraisal from a third party at the board review, to say, hey, you know, we need this explained, and you have 30 days to explain it.
To come up with a story.
It's gonna be, well, you can't just, you could just pull it. It's still, I mean, it's gonna be a lot of work for someone, they got 7 or 8 of them, you know. I mean, we get calls from Florida is vigilant on this, and you know, you have a lot of people in Illinois that have multiple homes. The exemption in Florida is worth a lot, but they have an entire staff, 5, 6 people per, especially in the larger counties, that are just on this kind of exemption police, because they know in Florida, they got a lot of people living in various spots. And you're supposed to have one principal resident, not in the state of Illinois, one in the world, that's your principal residence, you know, so,
Okay, I didn't want to go down a rabbit hole. I just wanted to make sure that,
that's fair.
I'm actually glad we got a chance to talk about it, because this is a big one.
Yeah, and, you know, this year, because of the politics involved, you know, they want to raise our homestead exemption to 10. I'm involved with the county assessors organization, and I phoned Senator Reich, I said, you gotta this is not right. I know everybody wants $10,000 off their bill as an exemption, but you can't, raising this to 10,008 is just gonna, you know, really smoke the farmers more, the renters who are gonna get a pass through from the landlords. So, you know, they continue to just raise and raise and raise these exemptions. But at least they dropped it in the collars to 8, and I'm kind of glad we do have it now, because if we didn't have it and everybody else did, if you were just outside the collars, now they're gonna be squawking, why do they have an $8,000 exemption, we only have 6, but it'll be that once it hits Chicago, then it moves out here and the rest of the state, and then a few years later, they never go backwards with the amount of the exemptions. And you're not gonna fix property tax with exemptions either. Okay.
All right, so your budget.
Yes.
What have you done for me lately?
Budget is not in the packet, it was emailed out last night.
Email separate.
It was rushed to get through to, we didn't realize it was in the, here. The budget is kind of status quo, you know, next year's quad, so next year would be, the publication is in here, because we do publish all assessment notices each year. And, but all, no, we publish all changes each year. We send all notices, but we publish everybody in the quadrant. That's in here, so that's an increase, that's a state mandate. Everything else is status quo. We did have lower appeals last year, as you can imagine, the lowest we've had, based on the market. I don't know what's gonna happen with the market, but as of January 1st, 2022, this assessment year, there's a bit of uncertainty. The numbers are down now rapidly in terms of number of contracts, et cetera, for mortgages and applications for mortgages, but we haven't seen it in the pricing yet, but I don't think it's, you know, it's gotta stabilize, I would think, but there won't be nothing done much by the assessors either, other than equalize. This is last year, the assessment. So, you know, getting ready for the quad. I don't know what'll happen. You know, if the market goes down because we have the 3-year sales ratio, that does lead to a lot of appeals in that given year, because just like it softens the rise up when values are going up, it also softens the decreases on the 3-year sales ratio. If you want an immediate decrease in your assessment, you have to appeal. So we'll have to see when that market changes. But other than that, we have a relatively flat budget from last year. We don't have many other than of what we control, what I control in the budget. And most of the stuff is state mandated and
Well, his budget's almost entirely staff. There really isn't much stuff.
Anyone have questions? No? Consensus to move the assessment budget forward?
Mm-hmm.
Hey, thanks for wearing a tie today.
I'm glad it was. Glad it worked out.
Blow the dust off.
All right.
Some cheese on it too. That's what I got. So.
Good thing there's some yellow in it then. You just
I'll keep you abreast of how this looks with the exemptions, and then I'm curious to see what comes of it really, what the numbers are talking.
My guess is you're gonna get a really, really thick bundle of paper.
Yeah,
It's gonna take a while for your
Unfortunately-
staff to go through it. I mean,
well, it is going to take a lot, but you know, I was talking to Alex too. I said, you know, we're going to have to get involved in this, because you can't, you know, there's going to be some pretty irate people, whether they deserve it or not, you know, on these phone calls, and you know, you certainly wouldn't want to send, you know, involve somebody who's not, you know, just that's not their battle.
well, you have a very calm demeanor. I'm sure you can.
But the second part, then it might be a little different after that.
Yeah, it could be. After your 12th phone call.
Yeah, right.
Okay.
For each exemption.
Yeah, there you go. All right, thank you very much. Appreciate it.
Have a good day.
Thanks.
10.1, program evaluations.
Yeah, this is just a super quick update. I've been telling all the committees this time around that we are looking at different programs that the county is doing. As part of your strategic plan, you want us to evaluate programs. So we're defining programs in this sense as things that we're doing that we don't have to be doing, not state mandated, but just things, and trying to get spend some time in the coming months doing some cost benefit evaluation of these programs. So we're looking down to each committee and finding some things to look at. It's our short group, our team kind of running this is Alicia, Shaylin, myself, and Scott. Then we're working with the subject matter experts in each office and department to work on this. For finance and audit, we are thinking about looking at what's going on in the recorder's office with all the electronic document filing, the investment we've made there, the return we've gotten there, and also the exemption fraud recovery. That's been a program that the court's been pushing a lot, so kind of wanted to just start there with something easy, but do a good evaluation of that program and the cost and the benefit there. So that's where we're going to start. So you guys have my other question then is, are there things that you are seeing, and maybe this is an example of another program that we should be evaluating now, that we should be taking a look at that are under the purview of finance and audit? And you don't have to answer that now, but just as when we come back with some evaluation, if you think some other things that you'd like us to look at, please let us know.
Does anyone have anything at the top of their head?
But I'm just thinking this would be another one.
Yeah, this might be.
Yeah, I would say this one would be,
Yeah.
especially in light of the software we're buying, purchasing for it.
Right, so we're gonna
Not
spend
gonna be able to do anything.
$91,000 a year, and that's, we're not gonna make $91,000 because of the exemption. We're gonna save you, who's not cheating the system, we're gonna save you a little bit, but we're not, how much, I don't know yet.
You want to evaluate that this year, though. It's going to take a couple years
Yeah.
before that.
Yep.
But if it's an ongoing cost, then at some point, if we can eliminate the cost, if it's not doing anything.
Well, and that's something to look at, because you can certainly see that it's gonna generate the most leads the first year. That number is gonna get smaller, probably. It's still gonna find people, but not nearly what it does in the first 2 or 3 years.
Well, and I think if the word gets out that we're scrutinizing the snot out of it, they're not gonna know whether we're doing it or not, so. Okay, Kevin.
Yeah, so just 3 real quick updates. One is our ARPA quarterly report has been filed, so as of June 30th, so that will be Q2 of 2022 with the U.S. Treasury. So that report is now posted on our website, so Advanced McHenry County. You'll see all the details of the different projects that have been funded, what we have actually paid out, and the different sub-awards and different expenditures that we have submitted to the U.S. Treasury. So that's available on our Advanced McHenry County page. Same thing with the 2022 recovery plan. So that summarizes all the different projects, and that's a 60-some page PDF document on our website. So between Steven and Bronner Group, they have put all this information together, reached out to all the awardees, and got all the reports, and so that's all included on the Advanced McHenry County page. So I would recommend, I can also email that to the committee if you prefer, but it is available on
It's
the
a good
website.
report.
Yep.
Very
So,
transparent.
yeah, it goes in line with all the different requirements as far as, all the transparency, all the different requirements under the U.S. Treasury as far as what has been paid out, when, and all that. So that's all included in there. And then the last thing I have is on the report that John Rader just went through, you saw that there was a comment about decentralized cash accounts or cash collections. One of the original plans that we had, and with the staffing changes, I didn't get to get it done in 2022, but one of those is implement a sort of countywide cash collection system that we can use across different departments. Now that our department is going to be fully staffed, we're going to pick that up and start working on that in 2022, 2023. So we're going to probably be issuing an RFP to work with HSO and D365 to see, if we can find a point of sale system that we can use across the different departments. Some of the elected officials, they still will have the option because we can't really tell them if you have to use the system. but there will be an option that can fully integrate with the system. HSO is already doing a lot of the back-end research on these, but this is something that's coming to address that concern from the audit side. So that's all I got.
Were you not gonna tell us about the award or what?
Oh, yes, I'm sorry.
What do you think it came?
I'm sorry. I'm so sorry. Well, two things, I guess. One, I'm sorry, yes.
Well, let me do the small potatoes one first. So the water sewer, those applications were all due at the end of July, and we got $27 million worth. So we got a lot of sorting out to do there. But we'll get to that. We are planning on doing some screening now. We're going to be meeting with Chairman Bueller and Chair Scawa on the 24th of this month. And start sifting through that as we get into September. All right, now the big stuff.
Yeah, the big, yeah, so, the 2022, but we just kind of take it for granted now, I suppose, but so I apologize. But yes, the 2022 budget, which kicks off the Triple Crown award for the county, that was, the 2022 budget received the award, and we found out last week. Is that right? And I know a press release went out today, so Carrie continues to do an amazing job with the budget process and make it seem so easy, really. But that document, again, has been reviewed by GFOA, has received the award, and this is the 10th consecutive year that we've gotten an award.
It's our 10th.
Yep.
Right.
So,
Make up a number, whatever.
yeah, whatever the number is.
It's
but-
8 years, and just for your food for thought, Carrie was involved in 7 of those years.
Yep.
I think that should be.
Great job, Carrie.
So we definitely appreciate Carrie's work and that document, and just putting such a comprehensive document out there for transparency, and now with Questica, the things that you're doing with Questica in terms of the ability for people and the public to go on our website and drill down, so far down into department or main account when it comes to exploring and navigating your budget. That is something to be proud of as well. So that's all. Thanks for
You're sure this time, right?
Thank you for the reminder.
There was no contingency, EDC. We have the
Annual meeting /
yes,
picnic.
right, at Crystal Lake. Well, you have all been invited. Hopefully you RSVP'd to Gene that you can be there.
It's next Tuesday.
Yep. I don't have anything else on EDC, do you? Natural McHenry County.
Scott, you have an update on Natural McHenry County?
Good morning. There was a meeting this afternoon at the, what's going off on music? There's a meeting this afternoon at the Community Foundation building. Key item on the agenda is talking about planning sessions for a strategic planning retreat.
Scott, you're at home today because you got 3 meetings in Crystal Lake. Tell us about the JRB meeting that you're doing also.
This is for the TIP districts in Crystal Lake, and they're instituting a new TIP district for what would be former Walmart property. That's the 3 Oaks recreational area, and so that's one. The second one is it's a meeting that our EMA is holding with the schools just to talk about like school safety measures and in light of all the tragedies that are going on. So they're hosting a session discussion regarding that.
Yeah, I forgot about thanks for mentioning. It's not really finance related, but it's good to know about.
Yeah.
All right, thanks.
Thank you. All right.
You're welcome.
No other business. I'll entertain a motion to adjourn at 9:30. Steve, Tom, all those in favor say aye.
Aye.
Aye. Opposed? Motion carries. Thank you, everyone.
Thank you. And Dave Christian is getting all the superintendents together today.